G'day fellow crypto explorers. Picture this, you're standing atop the Eureka Tower here in Melbourne, gazing over the city lights when your phone pings, not with a weather update, but a real-time Bitcoin transaction zipping across the globe faster than a kangaroo on a mission. That's the raw energy of crypto we're tapping into today, right from the heart of Australia's innovation hub. I'm Sash, your dedicated Bitcoin advocate, and this is the daily Bitcoin and cryptocurrency update. If you've ever marveled at how a simple line of code can challenge centuries-old banking systems, or felt that thrill when your wallet balance ticks up in green, you're in the right place. We're not just reporting news, we're unpacking the revolution one block, one insight at a time. Let's dive in, build our knowledge stack, and maybe uncover a few hidden gems along the way. What excites you most about crypto's potential? Let me know in the comments as we go. All right. Before we unpack the headlines, let's ease into it with a fresh crypto joke to keep things light. You know those massive Bitcoin whales who move markets with a single transaction? Well, why did the crypto whale refuse to play cards with the sharks? Because it was afraid of getting finned out of its sats. Grown with it? Maybe, but hey, it beats a bear market blues. If you've got a funnier one, crypto themed or otherwise, drop it in below. I might feature in the next video. Laughter aside, let's turn our focus homeward. Melbourne and the broader Australian scene are absolutely buzzing this week, and it's got nothing to do with the cricket scores. Kicking off with the local landscape, because what's brewing in our own backyard, it's straight up transformative for how Aussies approach wealth and finance. Leading the charge, Block Earner has just unveiled Australia's first ever Bitcoin-backed home loan program. Let's break this down step by step. After a grueling regulatory showdown with the ASIC that spanned most months' hearings, appeals and compliance tweaks, they've secured the green light. This isn't some fringe experiment, it's a fully licensed product allowing you to leverage your Bitcoin holdings as collateral for traditional mortgages. So imagine you've been holding BTC since the 2021 highs, watching it appreciate, but maybe Melbourne's market, property market, is still pricing you out with median homes at over $900,000. Now, instead of you liquidating your crypto and facing a hefty capital tax gains bill, potentially 30 to 45% depending on your bracket, you can pledge your BTC, borrow in Australian dollars, and keep your stack intact to benefit from future gains. But let's go deeper. How does this work mechanically? Block Earner partners with licensed lenders to assess your BTC value at current market rates, say today's $161,000 per coin, then offers loans up to 50 to 70% LTV, loan to value ratio, to mitigate volatility risks. If BTC dips sharply, you might get a margin call to add more collateral or repay part of the loan. But on the flip side, as BTC rises, your borrowing power increases without refinancing hassles. This could unlock trillions in dormant crypto wealth globally, but right here in Oz, it's projected to inject 5 to 10 billion into the housing market over the next few years, per industry estimates. For young buyers in Sydney, where deposits average 150,000, or investors in Brisbane eyeing growth suburbs, this bridges the gap between digital assets and real-world needs. Shifting gears to another Aussie highlight, AusCryptoCon 2025 is officially set for November 2023 at the International Convention Centre in Sydney. And folks, This is shaping up to be an event of the year. Expect over 1,000 exhibitors from startup pitching AI-driven DeFi protocols to established players like Coinbase and Binance showcasing regulatory compliant tools tailored for APAC. Keynotes include blockchain visionaries like Vitalik Buterin or Ethereum's roadmaps and local heroes like Blockchain Australia discussing Aus-specific innovations. Panels will cover hot topics, DeFi regulations, post-FTX lessons, NFT integrations in real estate, think tokenized property titles, and sustainable mining using our abundant renewables. If you are based in Melbourne like me, flights are cheap, Qantas has promo deals under $200 return, and the networking alone could spark your next big idea. Pro tip: early bird tickets are still available at $299, including access to workshops on wallet security and tax optimization. This con isn't just hype, it's a barometer for adoption. With Gemini fully launching its Aussie subsidiary last month, adding advanced trading features, and Bitcoin ATM surging to over 500 nationwide, up 20% from last year, Australia's crypto ecosystem is maturing fast. We're no longer trailing Canada or the US. We are innovating in our own right, with unique focuses on eco-friendly tech and consumer protections. Now, let's connect the dots. How do these developments interplay with our local markets? Regulatory wins like block earners set a precedent, signaling to super funds and banks that crypto integration is viable and low risk. Rumours are swirling about partnerships between exchanges like Independent Reserve and major lenders like CommBank for hybrid products. But with BTC experiencing a slight pullback today, is this the moment to allocate to your self-managed super funds, SMSF? Well, let's explore that in analysis, but I'd love your input. Would you use BTC as loan collateral, or does the volatility scare you off? Comment below and let's discuss your perspectives. Make this community thrive. Expanding further on Aussie adoption trend, let's look at stats. According to Finder's latest survey, 25% of Australians now own crypto, up from 17% in 2023, with Melbourne leading at 28% penetration. Why? Factors like high inflation peaking at 7.8% in 2022, pushing folks towards hedges, plus educational initiatives from universities like RMIT offering blockchain degrees. We've also seen grassroots growth, crypto meetups in Perth drawing 200 plus attendees monthly, and Brisbane Tech Hub fostering startups like Power Ledger for energy tokenization. Challenges remain. Scams cost Aussies $300 million last year per ScamWatch, but tools like ASIC's investor alerts are helping. Overall, this local momentum isn't isolated. It's fueling global perceptions of Australia as a crypto-friendly jurisdiction, attracting inbound investment from Asia and Europe. From our sun-soaked shores to the worldwide whirlwind, let's broaden the lens. Bitcoin's holding firm at approximately 161,000 this morning, a modest 1.5% dip from yesterday's close, but solidly above that key 150,000 support level we've been eyeing. That's translating to real resilience, especially with Ethereum at 5,500 showing a similar slight pullback, while alts like Solana hover at $257, up 1%, and XRP at $3.70, mix flat. The overall crypto market cap stands at $5.2 trillion within 24-hour volume at 268 billion, cautious but steady amid broader economic signals. Globally, the headline grabber is wild activity. Long-term holders including that legendary Owen Gundan wallet from the early days, transferred over 3,600 BTC yesterday, adding temporary downward pressure. But balance that against institutional inflows, ETFs are rebounding strong, with 450 million net buys in the last day alone, spearheaded by Fidelity's FBTC and Ark's ARKB. This follows October's rare negative month for BTC, down 3.5%, the first red October since 2018, but analysts see it as a healthy correction. Ethereum's ecosystem is buzzing too, with layer 2 solutions like Optimism and Arbitrum processing record transactions, reducing fees to under 50 cents Australian dollars per swap. Solana's meme coin frenzy continues, but with upgrades like FireDancer Validator software, it's positioning for enterprise adoption. XRP, post Ripple's SEC win, is gaining traction in cross-border payments with pilots in Asia Pacific. Diving into price predictions, short term, with US jobs data due Friday, expect volatility. RSI at 48 indicates neutral territory, not oversold. Bulls are targeting 180,000 by December if ETF momentum holds, backed by Glassnode data showing reduced exchange outflows. Bearish counters, 17 technical indicators in red, including MACD crossovers, but on-chain metrics like active addresses up 15% monthly, paint a bullish undercurrent. Trump's pro-crypto stance now, with the US holding a strategic BTC reserve of 200,000 coins, is a tailwind, potentially adding trillions in liquidity as CFTC oversight streamlines regs. Elsewhere, Kazakhstan's 1.5 billion national crypto fund diversifies from oil, while Europe's MiCA framework syncs with our ASIC rules for seamless cross-continental trading. Asia remains steady, with Japan's CBI holdings expanding exchange offerings despite the G20 debates on stable coins. To add context, let's compare to historical cycles. In 2021, BTC hit 100,000 amid hype. Now, with matured infrastructure like spot ETFs, over 50 billion globally, dips feel less existential. Factors influencing today: geopolitical stability post-elections, Fed rate cuts, another 25 BPS expected, and retail FOMO as apps like Revolut report 30% user growth in crypto features. Engage with me. Are you bullish on $180,000 or prepping for a deeper correction? Your views shape our discussion. Time to layer in the analysis, where we connect news dots to real-world impacts. Starting with that Bitcoin-backed loan in Australia, beyond convenience, it's a seismic shift in asset utilization. By avoiding sell-offs, it stabilizes markets. Fewer dumps mean less volatility spikes. Globally, this mirrors trends like AVE's real-world asset RWA lending, but Oz's version adds regulatory robustness, potentially inspiring the UK or Singapore. Risks? Absolutely. A 20% BTC drop could liquidate positions, but built-in buffers like auto rebalancing mitigate that. Implications for local markets. Expect super funds to allocate more to crypto, with estimates from Deloitte suggesting 20 billion inflows by 2027. On the global front, ETF rebounds signal institutional confidence post-October's dip. Trump's policies aren't rhetoric. They're catalyzing adoption. Think reduced SEC scrutiny, freeing up innovation. Whale sell-offs? Often tax-related year-end maneuvers, not panic. Tech breakthroughs. Bitcoin's original ordinals are evolving into full-fledged NFTs, while layer 2s like Lightning Network handle 1 million TPS, rivaling Visa. AusCryptoCon will dissect this. How do we integrate without bubbles? My balanced view, this dip is accumulation gold. With 95% of BTC supply mined and halvings enforcing scarcity, next in 2028, long-term upside is immense. But diversify, don't go all in. Historical parallels. Post-2018 bear BTC 10x. Today's metrics, hash rate at all-time highs, echo that setup. Broader ecosystem, Ethereum's Denken upgrade slashed fees 90%, boosting DeFi TVL to $150 billion. Solana's speed 65k TPS suits gaming DApps, while XRP's ODL saves banks 70% on remittances. Regulatory harmony, Australia's clear tax guidelines, crypto as a CGT asset aligned with global standards, reducing flight to offshore havens. Potential pitfalls, well, geopolitical risks like Middle East tensions impacting energy, mining costs, or quantum computing threats, though mitigated by post-quantum algos in development. Overall, volatility is a feature, not bug. Use it for entries. What's your strategy amid this? Please share below. Shifting to education mode, because true empowerment comes from understanding the tech, not just headlines. Let's start with Bitcoin fundamentals. Born in 2009 from Satoshi Nakamoto's white paper, BTC is a peer-to-peer electronic cash system on a decentralized blockchain, a tamper-proof ledger distributed across thousands of nodes worldwide. Proof of work, or known as POW, secures it. Miners compete to solve cryptographic puzzles, validating blocks every 10 minutes, earning 3.125 BTC rewards post 2024 halving. Why revolutionary? No central authority, no Fed or RBA dictating supply, capped at 21 million coins. Self-custody 101. Exchanges like CoinSpot are convenient but risky. Remember Mt. Gox? Opt for hardware wallets, Trezor or Ledger, storing private keys offline. Generate a 24-word seed phrase, back it up on a metal plates for fireproofing. Myth bust. Crypto is anonymous. Transactions are pseudonymous, traceable via blockchain explorers like Blockchair. Some investment tips. Dollar cost averaging, DCA. Invest $100 weekly, averaging cost over time. Portfolio allocation. Beginners, 5 to 10% in crypto, 50% BTC for stability, 30% ETH for smart contracts, 20% alts like Sol for growth. Risk management, set stop losses, diversify across chains. Consumer protection deep dive. Scams evolve. Pig butchering schemes via fake romance apps cost 180 million last year. Red flags guaranteeing returns, impossible. Unsolicited wallet recovery offers, phishing sites mimicking Binance. So you defend with 2FA via authenticated apps, not SMS, hardware verification, and ASIC's Money Smart resources. Tax basics. In Oz, hold over 12 months of 50% CGT discount. Use tools like Coinly for tracking. Not advice, but pros can help. Common pitfalls, FOMO buying highs, study cycles instead. Expand your toolkit. Simulate trades on paper. Join local groups via meetup.com. Craving more depth? The web's packed with free treasures. Princeton's Bitcoin and cryptocurrency technologies on Coursera, 10-hour. It's covering consensus, mechanisms to privacy coins. MIT's EDX, blockchain and money, free. Explores economics and regs. Locally, Blockchain Australia's one online sessions, Demystify DeFi. Check their site for schedules. For taxes, ATO's crypto guide is gold. Pair with accounting for automated reports. Visual learners, Whiteboard Crypto on YouTube breaks down complex topics like zero knowledge proofs. Go on to books, The Bitcoin Standard for history, Mastering Ethereum for devs. Podcasts, you can have a look at Unchained for interviews, the Pomp podcast for market insights. Stack these like sats, consistent learning compounds your edge. If today insights have sparked your curiosity, for more info or news updates, head over to cryptologic.com.au, your go-to for fresh Aussie crypto coverage. What a marathon dive from Aussie loans, innovations to global market maneuvers. Crypto is proving it's more than digital money. It's a gateway to financial sovereignty. I believe in this tech because it democratizes access, empowers individuals, and challenges outdated systems. Borderless, inclusive, and unstoppable. Trump's policies ignited sparks. Now we're fanning the flames. Key takeaway? Stay informed, act wisely, and build your future. Like if this resonated, subscribe for the next update whenever it drops, and share with someone ready to join the revolution. For more info or news updates, head over to cryptologic.com.au. Remember, in crypto, we're pioneers charting new territories. Until next time, stay curious, stay stacked. See you in the blockchain. Cheers.